Hello and welcome to today's morning report on the Wednesday the 4th of February with me, Rich Perry, market analyst at Tech Markets. The European trading session has got off to a slightly corrective start, not too significantly, but equity markets are slightly lower. FTSE down about 5 points, DAX off 15, and that's come with a slight downside move on the oil price, but that downside move sort of correcting a very strong move to the upside that we've seen in recent days. Now, this recent improvement in the oil price has certainly improved sentiment. You can see sharply lower on the VIX volatility yesterday, with strong gains on the S&P 500 overnight, and also that improved sentiment has just dragged the dollar lower as well. Interestingly, with euro strength in the last few days, and even cable rallying as well today, and in the last couple of days. But what I'll show you here is the oil price. This is the WTI, which is broken above that reaction high at 51.27. That sort of completes arguably even a small base pattern, but I think more importantly, you're sort of now up into the next congestion range. And it's, as I said, it's slightly backed off today, so that may be one of the reasons why markets are slightly in a little bit of downside, but not too much, only very slightly lower. And interestingly, that we've also seen the commodity currencies start to rally, and this is copper. Copper price starting to pick up quite strongly, or certainly did yesterday, and that's benefiting the Aussie dollar today, and also the Kiwi dollar, with obviously the rebound in oil helping that as well. Now, what we've got to look out for today is all the service sector PMIs throughout the world. We've also already had all the Eurozone ones come out. The Eurozone saw quite positive moves, actually. Germany, Spain, Italy all beating expectations. And also the Eurozone the Eurozone services sector PMI beating expectations, and also the composite PMI beating expectations as well. So that should be fairly supportive of the euro today. And what we've now got to look forward to is the UK sector UK version service sector PMI. Now the service sector PMI is encompassing of about 75%, about 3/4 of the UK economy is service sector based, so that certainly has an impact on it. And what the service sector needs is certainly this PMI to start to pick up again, because it certainly has lost a bit of its way in the past year or so, with fairly consistent lower highs there on the PMI. So it needs to start picking up now. 56.3 is a start if it comes out in as expected today, but still has a fair bit more to do, but it would be a good start today. Then into the afternoon, we've got the US data. We've got the ADP number. ADP employment is expected to come slightly down from the last month at 225,000, slightly lower than that 241 that we posted last month. It's sort of in line with, I think, the general just marginal and slight improvement in the US labour market. Fed believes it's strong improvements, but I suppose the US adding just over 200,000 jobs a month seems to be sort of fairly solid, but not entirely spectacular, and that would be in line with that view as well. Now, also into the afternoon, we've got the the ISM non-manufacturing PMI. For the States. Now that is expected to basically broadly stay in line with expectations, with last month at 56.3, so very slightly down from that 56.5 last month. So what else have we got to be driving these markets? Well, we're looking at the chart of the day, which is the Euro Yen, and Euro Yen is interestingly poised, actually. It's rallied back towards this 135 key old floor, and that old floor could now become resistance. But we've got a bit of conflicting views, as I said, on the daily chart versus the intraday chart, because the daily chart shows these momentum indicators now picking up quite strongly. You've got the bullish divergence on the RSI, bullish divergence on the stochastics. Both of those are also rallying fairly positively. And also, we're now beginning to get the MACD lines crossover, so that could be indicative of the beginning of a rally. Now, what we're looking out for is on this intraday chart. This is that 135 resistance. Very near term, I said in the morning report that you're having a slight rollover of these technical indicators on the hourly chart, and that has driven a bit of a correction near term, but I'd be looking out for support now to come in around that 134 mark, between 134 134.35, which it seems to have been 34.19 is the low that we saw just in the last hour or so. And what I'd be looking out for is now a higher low to come in. You've obviously got a floor in place around these sort of key lows of the last few days, around 132.50. And if we can now start to see a higher low, I think maybe around the 133.50 area, 134 figure area, I think that would be possibly the beginning of an assault back on this 135 mark, because it certainly looks on the daily chart as though the indicators are improving. You've sort of arguably broken a bit of a downtrend going on there over the last few weeks, and it was starting to now break out to the upside. So if that 135 barrier is overcome, then I think you can certainly start to think about this euro rallying back towards 137.60 area, which is that reaction high that we saw in late January. So I wish you good luck in your trading throughout today, and I will speak to you later. Thank you.